Welcome back to Crown's Crypto Cave. Wishing you a happy and healthy start to this nice little Sunday morning over here from Helsinki, Finland. Had a good morning walk, and it is a very much needed necessity for today because we are going to get into some more long-term analysis. We do have a new monthly and weekly close coming up a little bit later tonight for the weekly, of course, but we do already have CME, which did happen on Friday, and the monthly is now in for spot price action as well as CME as well. So there's plenty to talk about, and this is going to be, again, fully focused on the higher term timeframes. We'll just ever so briefly touch on the low term timeframes. I don't want to waste too much time because this might be a little bit on the longer side, and I'm going to upload this at maybe a different time as well. So this will be one of those videos kind of in that series of long-term analysis videos that I want to be having there to kind of go back on and see how we kind of build this case over time to see whether or not Bitcoin's going to the moon or not. Anyways, with that said, at the end of the day, this channel is focused on traders, so realistically, whatever it is, traders going to trade. And with that said, let's now focus on the CrownGen application, which we found at app.crowngen.net. And what do we see? We see Bitcoin dominance rising like a goddamn phoenix once again, which is to be expected as Bitcoin does lead the rally and does soak up altcoins alongside that. That is actually a good signal. It does signify that this rally does have, some oomph to it, and it is, more or less on the healthier side amongst many other things as well, of course. But we do suspect that we do expect Bitcoin to lead these rallies, and that's what we have seen in the past, obviously, with all the starts of, nice uptrending and long-term moves. On top of that, we see Fear and Greed Index actually in the greedy zone for the first time, realistically in 4 months now, ever since I believe April, and that is going to be, a little bit of a moot point right now, because at the end of the day, price action is what declares that, and we'll just actually go into it right here, and we'll check out the chart soon enough. But what I want to focus on first is actually the global funding rate. We see it at the 0.01% threshold that we typically do see it at, which I consider par for the course. So nothing too crazy right there. It is to be expected that it is going to be positive. You should be paying for your long positions when Bitcoin is more or less in a 10 or 11 day unabated uptrend. Nice, not bad. And that is like a 40% move thus far. I think a little bit more than 40% move. So now finally longs are paying for that. And I really wouldn't put too much weight on this until we see it get really, really high. In this case, 0.1% or more is where I'm looking for to kind of denote, a major high, which we are about a tenth of that right now. Anyways, global open interest, still kind of following through with that. That is more or less fine. We do see it once again supporting price action, but sluggish nonetheless. And that is kind of where we're at right now in the short-term time frames. Actually, global exchanges net flows ever so slightly negative, pretty much an inconsequential metric right there. But more importantly, the global leverage ratio and the global exchange's Bitcoin reserves are now entering in downtrends once again. And as you can see, typically when we do see a downtrend for a prolonged period of time, that is when Bitcoin has put in its nice, very massive rallies. And we're referencing all the way back to September of last year, 2020, pretty much where we did get all the way in $65,000 in April, May, of course. And that's when the uptrend did actually emerge. Same thing running over here as well. And then what do you know? Bitcoin actually putting in what seems to be another downside move on that. Not anything too crazy right there, but does deserve a little bit of recognition because we do want to, cover up on everything today. Anyways, last and not least, we do see whale ratio continuing to go down. Good. Hash rate continues to go up. Good for the BULOS this is. I mean, we are kind of biased towards that side, I do suppose. And then if we go over here to the Fear and Greed Index represented in a chart format, you can see it could very much use a pullback right there. No, I don't think it works like that on Fear and Greed, of course, but I do want to showcase that we are at the highest level that we have seen actually since April, May, in fact. Anyways, with that said, it's time to go into price charts right now. We're going to start off with the very short-term time frames today. Again, it's going to be very, very short here. I don't think that there's too many new things to talk about from yesterday to today, and we can go on some testnet accounts as well. But as it stands right now, Bitcoin once again grinding up against that $42,600 target that we had coming into this weekend. Actually, a little bit above there on BitMexico right now. I don't look at this as anything that I'm interested in playing right here. I really want to see a CME opening before I do anything personally speaking. But I do know that there are some cavaliers out there who do enjoy the weekend, and fair enough. You could also just use your weekend to go for a nice relaxing walk, but to each their own. And as it stands right now, does Bitcoin look like it's ready for maybe a little bit of a short-term pullback? Probably yes. Anywhere down to the bottom side of this blue box territory right here is certainly fair game. Wouldn't do anything of particular interest, at least in my opinion, and that's at around 40,500, even down to $40,000 is completely fair game right here. Constructive, especially on the short-term time frames, as long as we're above $40,000. And if we do go to the medium-term time frames, I would say Bitcoin could very easily come back down and probably even does sometime maybe earlier this next week, although I wouldn't necessarily hold that statement to full fruition. It's going to be a full focus on the higher term time frame soon enough, but anywhere down around our last higher low on the 4 hour, which is about 38,500-ish region on Friday, is fair game as well. So I am more or less bullish on the medium and higher term timeframes, especially as long as Bitcoin is maintaining this on the lower term timeframes. And then we're going to go into more long-term analysis right here. Is there any sort of signals I want to point out right here? 4 hour Jewel is not giving us a down signal just yet, but it is certainly lining up on the upside signal. So that it's not really a signal in and of itself, but it is just saying that, hey, we're consolidating, which is, well, exactly what we're fucking doing. And if we go over here to our momentum charts, what do we see on our very short-term timeframes? Just curious what we're at. 4 hour Stokes will be heading to the downside if we do fail to close above 41,750. But realistically, again, short-term timeframes are just, trading sideways in a nice, healthy, and constructive manner. So I really don't look at this as anything, too playable right here. 3 hours going to show what? Basically same area, but actually already crossing up right now. 41,550 is the magical number on this. And by hourly showing 42,350 or so. And hourly is showing 42,300. So it does look, short-term probably sideways and down, but still within range, more or less. And so I don't really look at that as anything that I'm particularly interested in playing. And for what it's worth, I can show my testnet accounts over here. Again, this is just, testnet account. It's not real fucking money, although it has been pretty damn fun to kind of play the positions that I'd be very interested in if this were not a testnet account. So there you go. Anyway, still holding my $33,000 long right here. Would have been nice to get a little bit lower than that, but fair enough. This is not my main priority, obviously, with the testnet account. But I'll actually still be holding this based off of the medium and higher term time frame analysis that we're about to get into soon enough, and talk about where I'm looking to offload a little bit of that. As far as the options side of this goes, I'm actually quite happy with this thus far. You can see that I think this account started a few weeks ago at about 15 Bitcoin. Now we're up to about 25 and a quarter Bitcoin. Don't know how much of this over here is marks, although I suspect that the $68,000 call strike is actually pretty well priced right there, so I do like that. And then obviously, what else do we see here? Yeah, the $36,000 call strike right here is looking pretty damn good as well, and actually that should probably be worth more as well, as this is September expiration, so we still got about actually 2 months of trading left to go before this even comes into before it even comes into parity. Right now, trading well above that actually. Anyways, other than that, looking fine right there. Here's my positions. I basically bought the $36,000 call strike. I originally had a strangle going on between the 32, 36 strikes. I sold the 32 strike as soon as Bitcoin did put in the bear trap from last week, and then I essentially what did I do? I basically just spread it out to all of the very deep expirations here, or sorry, all the deep strikes here, to just kind of reduce cost and actually make a little bit of profit on top of that as well, of which we did take several on the 64 and the 80 this prior week. So just covering up on that, let's go into the price action charts now. And should we start it off? Okay, how should we start this off with? Should we start it off with the bullish things or the bearish things? The bullish things or the bearish things? Let's start off with the bullish things. How about that? Because there actually are a lot of very interesting things going on right here. So first and foremost, I'm going to bring you over to this chart right now. Let's get rid of that because that's not a bullish one. Just kidding. Actually, you can make the argument both ways, but I'm going to make the argument that it is a more bearish thing. Anyways, as it stands right now, let's take this one off right here, and let's get on with the easiest one to kind of look at in its totality right here, right now, and that would be the stock flow rainbow indicator, just represented in a nice little colorized format here for your viewing pleasure. And while this doesn't necessarily have a full history going all the way back, I guess it kind of does over here, but it doesn't really work within the context of the last more or less 8 to 9 years. But anytime that we have seen Bitcoin in a parabolic rally, what do we see as soon as it starts to turn green right here? Kind of letting you know that we're getting pretty damn far away from that halving date. And what does that essentially mean? It essentially means that we typically do see a correction as soon as it begins. You see it right on over here. And this doesn't look like much, by the way. It really doesn't look like much, but it is. That's a deceptive part of this. That's about a 40% correction, by the way, or you might even call that a crash in traditional markets. Over here, a little bit less so, but we do see an ever so slight downside move right into it. That one being about 25%. A little bit less so though. And as you can see, more importantly, that first major drop was back on up, and we do see a lovely continuation. And actually from signal given to next high, I'm curious if there's any sort of rhyme or reason on this one. What I'm going to do right here is, when does it turn green? Right around here. Where's our next high? Right around here. That's 550%. I already know that that's not going to be the same on the other one, but let's go look at it anyways. And very impressive move, right? Same thing over, or sorry, I imagine a rather similar one over here. Let's see. Let's take it from the low to next high. And actually, wow, it actually is pretty fucking similar. In fact, I was not expecting that. I guess that is deceptively low. Oh yeah, that is only about $4,000 or 3,500. So fair enough. Yeah, there we go. Bad mental math in the early morning hours. So so my bad. Anyways, as you can see right here, we did turn green, and what do you know? Bitcoin actually turned, or sorry, the indicator actually turned green at the top of this rejection right here. That was about a 30% move to the downside. You know, obviously if we're measuring from the prior high to our current low, it's more like 47.5%. For full disclosure right there. But more importantly, let's just add on what happens if you add 400% onto this price action right here. Just curious where this kind of suggests, and maybe what we're going to do. And by the way, as you always know, or at least if you're not new here, you always know that the titles of these videos have very little to do with the content. Maybe a little bit of clickbait we'll do today, and we'll say, you know what, we got signals before that gave us 400 to 500%. We're going to $150,000, baby. It's moon time and beyond. There you go. Anyways, I do think that is rather interesting, and that would be a little bit more on the bullish side. This is a fundamental indicator, of course. And then what can we do on top of this? Well, we can actually bring us over into the Bitcoin log curve zone as well, which is rather interesting to me because it has gotten the top side of all of our parabolic blow-off tops in the history of Bitcoin, going back actually to 2010. So going back to the genesis. So we have this one over here, 2011. This was at a ripe old price of about $38.50. We have this one over here at 1,300. We have this one over here at about almost $20,000, as you probably know. And where's the top side of it coming in right around now? About $120,000, and obviously going to be rising, assuming that Bitcoin just doesn't completely shit the bed, over the next few months here. Anyways, more importantly, what sort of interpretation are we seeing with this right now? Actually, we are seeing a more bullish interpretation of it as it stands as of this moment in time. What do I mean by that? Well, we have something very similar going on over here to what we saw back in 2013. And just the general sort of gist of this indicator is that as we do come into the yellow zone, we typically do see a short-term consolidation, relatively speaking, on a time frame like this. And as long as that does not break back in on a closing basis into the green zone, we have seen those consolidations lead to upside resolutions. Same thing over here. Same thing over here, same thing over here, same thing over here. And once again, Bitcoin has been consolidating for a good amount of time within the yellow zone right here. And while it has actually tested down to the green zone, it has had a nice bounce off of it, and no consistent breakages have been had. So we could be looking at this as sort of, a little bit more on the Bula-ish side, I suppose. How much weight do I put on this? Not a whole hell of a lot, but it is rather interesting nonetheless. Anyways, let me just make sure that I have my notes open over here because there is many others to get into soon enough. Anyways, I suppose the next sort of, full-on I wouldn't say full-on confirmation, but the next sort of, step in the right direction, if we are going to start to see those more aggressive numbers in the 120 to like, I think the other like measured, or sorry, the other, what was this one looking like? Okay, 400% puts that at $150,000. Yeah, in a few weeks, or maybe not a few weeks, but a few months, it actually will be around there. Bless you, sir. Anyways, we can say some clickbait bullshit about that, but more importantly, you can see that perhaps there is a path there forwards, maybe in the next year, if Bitcoin does continue on with the general upside. In fact, if Bitcoin is going to put in a macro low here, which I think is possible, it's certainly not confirmed just yet, but it is certainly possible, then what would that imply? It would probably imply that we're going to see new all-time highs above our current highs. Not necessarily, I'm not saying this is the $100,000 target right now, but new all-time highs above our $60,000 current high, probably before end of year, if I had to guess on that one, which is kind of funny because BitBoy actually asked me a question like that, and I didn't really thought too much about it. But now that I have, if this is a macro low, then yes, probably sometime around October, November, December, probably October, November, if I had to guess. If not, if this is just one last gasping breath before the downside, then well, probably a couple years away, maybe even more. Anyways, with that said, okay, let's get into the next one. Okay, so the next one is actually rather interesting as well, something that I did not present on the prior videos, and that'll be with our lovely fibs right here. Now, what is this? What are we looking at? Sir, what is this? Okay, so what I've done here is I've taken Fibonacci extensions from all of the prior cycle highs and lows. Key point on this one, I plotted this with the logarithmic the logarithmic setting on, by the way, fib levels based on log scale, just so you know, because it makes sense when you're looking at something that's this far away over this amount of time and that moves in these ridiculous percentages. I mean, for reference, like Bitcoin's all-time low to its all-time highs, 6 million and some odd percent. It's just ridiculous. Anyways, or maybe even more than that. I'm just googly eyes with those numbers. Anyways, so what we've seen in the past is actually something of particular interest right here. The reason why I say that, if I can actually get this fucking right, would be this. Okay, so let's get that around the high. Let's get that around the low. Good. All right, so you can see that when Bitcoin broke its prior all-time high in the prior cycle from 2014 to 2015 over here, we saw a lovely pullback. It was actually very similar to the ones that we saw based off the stock to flow indicator as well, leading into about a 40% move to the downside right here. And where do we base off of before moving onwards and upwards? That was the one spot 272 actually. Very interesting. Keep that number in mind because we might see it just yet again. And we do right around here. We do see if we pull a Fibonacci extension from this high to this low, this is your 2011 to 2012 cycle. Well, Bitcoin breaks the prior all-time high right here and we get a lovely rally. And this is actually where Bitcoin based off of in the double bubble in 2013, in fact, where right at the one spot 272. And then I did one for the very Genesis right in over here as well. A little bit more sloppy, but have to kind of make do with what we got. And what do you know? Where does Bitcoin find its lows on the 2011 cycle? It actually finds it right there at the one spot 272 as well. Very interesting. That's 3 iterations, the only 3 that we can possibly have. And if I do the same thing for a current cycle right here, guess where Bitcoin has thus far found its lows at the one spot 272 as well. Very, very interesting. So while, we do start to see a lot of things lining up here, I'd still say that this is, well and far away, but these would be on the good side, obviously. Okay, is there anything that I can pull up with this? Probably not. No, I don't want to look at that. What else do we want to get out right here? Okay, also this. So there is a very specific, maybe not specific, but there has been in Bitcoin's history a sort of, I'll just fucking show you. How about this? A sort of interplay when anytime that we get a weekly breakout, meaning like a new weekly trend, we have seen, a very interesting sort of percentage gain. So what we're going to do is we're going to go back on over here to the Genesis. You can see Bitcoin goes into this initial sort of consolidation phase on like this first year of operation, it looks like. And once we get our new all-time high breakout right here, how high do we go? We go about 400% to the upside on a wick on a wick basis. On a closing base, about 250%. Either which way, both very interesting. Again, we're just looking specifically at weekly trend. Bitcoin gets a little bit of a short-term reversal, close on new highs right here, goes on for about a 250% move to the upside right on after that. In fact, you could say that this one is not a reversal right there, as it wasn't really it didn't really have too much follow through on it. Regardless, whichever way that you plot this, this is a 10,000% move right here. So I figure you can kind of break them because it is just ridiculous. But if we were to take this one as well, just kind of showcases on a closing basis, 1,600%, on a wick basis, about 3,000% almost. Same thing over here. Bitcoin reverses, goes for a more long form consolidation. Its first one pretty much ever, and close on new highs right here to the next major high. What do we have? 1,300%. Not bad. What do we have over here? Bitcoin breaks above its last prior weekly high and goes on for a lovely tear, 670%. Not bad as well. That brings us into 2014, 2015. Bitcoin closes on new all-time highs actually not right there, but right here. And what happens after that? Well, we march our way upwards and onwards towards the next major high in 2018 at about $20,000 for a 1,750 or so percent gainer right there. And what do we have more recently? How does this current weekly breakout measure up to the past ones? Well, let's see, where do we break our new all-time high? That would be right here. From that area to our current all-time high on a wick basis, about 230%, on a closing basis, about 200%. On a closing basis, that would actually be the lowest that we've ever seen ever in Bitcoin's history after getting a weekly breakout to the next major macro high in this case. So I do put a lot of weight, I do put some weight on this actually, mostly because that would be certainly an outlier on the downside. We saw one other iteration, which was a questionable one, I'd say at best as well. That was about 230 to 250%. And realistically, all the other ones were massively above that, mostly between about 600% and even, in some cases like 1,500 to 2,000%. So if we were to play around with numbers here, once again, just out of curiosity, what would it look like? I need to lower this a little bit more. There we go. What would it look like if we were to add on, let's just say, I don't know, maybe 500%? That was still a little bit, somewhat in the more reasonable side from what we have seen in the past. That put Bitcoin, funnily enough, right at $120,000. That's very interesting now, isn't it? Because that's literally right where that is now, isn't it, as well? Anyways, if we were to add a little bit more, that'd probably give us the other higher target that we were looking at earlier. I think it was like $150,000, but interesting nonetheless. Anyways, what else do we want to be looking at right here as well? Okay, yes, so this is something that was not true Actually, this was something that was not true when I recorded the initial video, but it did eventually become true. Somewhere right around here actually is when it got confirmed. And what we're going to look at right now is the volume profile. And the volume profile is now showing very obvious accumulation. This was confirmed, like I said, somewhere in mid to late July. Actually, this was not the case beforehand. I want to repeat that because it's actually very, very important to denote that. This was not the case beforehand. And what does this essentially imply as far as the volume profile goes? It does insinuate that this was accumulation actually down around here. And if we go back to last month's accumulation distribution indicator, which we can pull up right in over here, we actually can see it. This is a lead into maybe some of the bearish stuff, but we actually can see, let me go over to this one right here, that from June to July did actually close as a positive slope. As you can see right now, it's humongously negative and very fucking concerning. And while last month we actually did have something somewhat similar as well, where it did have a negative slope, by the end of the month, based off of the previous price action, it actually did close as a positive slope, as you can see. Now, multiple exchanges kind of disagree with each other here. Finex, you can see, is certainly not as aggressive. Bitstamp is flat, certainly not as aggressive as well. I mean, it's literally flat. And Coinbase actually did close with a nice positive slope as well. So, it is a bit mixed right there. But when it's mixed, I typically go with the bigger exchanges. And Finex actually seems to be one of the more dependable ones. And Finex was slightly up, we'll say. And the index over here, which kind of conglomerates all of them, was obviously up as well. So that was last month. Obviously, this month on pretty much all exchanges, it is massively downside sloped, which we'll get into a little bit later. But I would say that does kind of solidify this, at least in the last month, as good and very likely to get more continuation, at least in the short and medium term timeframes, kind of basing, our earlier analysis off that. Anyways, what else do we want to look at right here? Okay, yeah, here's another big one that I don't believe that we've spoken about before. Okay, so this is the monthly over here, and I'm going to show you the advanced decline ratios. Make sure you go to this chart right here. There we go. Okay, lovely. So as you can see right here, or should I explain this indicator? It's basically making a ratio between the advanced decline. This is something that I used a lot in traditional markets. I actually really, really like this indicator, especially even on like a daily. It actually works rather well. But for our purposes right now, it's a little bit more simple. Anytime that we have seen the ADR above the 1 read right here, that essentially has been, well, your more or less bull markets over a long time. And anytime we've cracked below it, that has been basically game over for BULLs. As you can see right here, this is at a 2 read, or just at a 2 read right now. If we take off all of this, boom, there we go. You can see that this actually does work pretty damn well. We got a negative cross right here. Or sorry, not a negative cross, but we went below the 1 read right here. We went below the 1 read right here, leading into coronavirus sometimes. Also works on to the upside as well. We went below right here as well, actually too. So we don't have that. We don't have the same interpretation as that for right now. And why did I go back to that chart? I want to stay on this chart. Yeah, we had the same thing over here as well. So there was one more iteration. So 1, 2, 3, 4 iterations where that worked incredibly well. And as you can see right now, we're not just above 1, we're well above 1. Now that also does bring up some other questions as well, because as you can see, I've marked off, some pretty aggressive areas, both the upside and the downside here. And it's actually worked very well as a bottoming signal, incredibly well as a bottoming signal, and somewhat well as a topping signal as well. Got this high right here, did not get this. I mean, that is not a high, that is somewhat of a high, but not really. In the grand scheme of things, this one's certainly a high, and then this one over here, is our high thus far. So fair enough. You can make arguments both ways for that one, but I would say that the ratio, more importantly, is what I'm going off of right here specifically for this. Okay, the next one I want to get onto is another thing that we have not spoken about before as well, I don't believe. And actually, a couple things here now that I realize it. First and foremost, we got the old weekly Yellow 21 meme coming back into this market year too. Let's actually just showcase this one very, very simply as of right now. I'll actually leave the 55 on there as well, because why the hell not? And what do we see? We do see, let's go to a more long form chart. There we go. We do see that just in the most layman's terms, anytime that Bitcoin has been above the yellow 21 exponential average on the weekly specifically, and it also has a positive slope, good. And below it with a negative slope, bad. If you want to be bullish, obviously. But this goes all the way back, like I said, to about 2010. See, it gets pretty much all this first rally right here. Boom, cracks below, and massive, 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 massive move. Now you will see the first crack below is actually rejected. It gets a bull trap of a bounce. and then closes lower and then goes lower, obviously. Regains it over here, boom, glory times all the way once again. It actually even keeps you long in 2013, by the way, as well. Even though we did close below it for a second, it did not get a negative slope. Same thing over here, again, cracks below it. Simple bull trap of a bounce. Maybe we played this one in the bearish reads as well, and then spends its time, really drawing this one out and obviously moving low over time. Regains it over here and glory times all the way through to 20,000 bucks. Same thing over here on this rally, very beautiful rally from 4,000 to 14. Same thing over here on a current rally from 8,000 to 60,000 bucks. And as of today, it's going to have a chance to regain it. In fact, on CME, it already has confirmed this. I mean, CME is already closed for the week, and that is solidified, set in stone, and looking good. And I'd say the higher that it gets this week, obviously, the better it's going to look. So I'd be a little bit more on the bullish side right now. Also, if we could put on the Gaussian channel, you can see that we have bounced off the top side of it. Again, I can make a very easy case that this is a bearish one as well. But you know what? For right now, looking good, man, looking good. Anyways, yes, you can see that anytime we've been trending above it, good, but anytime that we have been trending above it for a while, and then we got our first down test into the top side of the Gaussian channel, well, that was the end of that rally. 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 So you can see that it can be two-pronged here, but we'll give the bulls their due diligence, of course, and that is Elsa's sign over there. Anyways, okay, I think I've nailed everything right here. And now we can move on into the bearish stuff, which is a little bit more fun. And actually, before we get into the bearish stuff, what I want to talk about is, hey, I'm very open-minded with price action right now. As far as what Bitcoin does here, I mean, we're gonna fucking trade whatever, whatever it does. We're gonna fucking trade. It doesn't matter. It doesn't matter. Is what I'm trying to say. However, the point that I want to make right now is that there are three very specific, and I'd even say one very specific things that I'm looking for to denote a potential macro low, a high probability of a macro low. And what I'll do is I'll bring you back on over here to our fundamentals chart, and we'll just go over this right here, right now. This is going to be the hash ribbons indicator as we typically look at. You already know it. Oops, let me bring it back on right there. And there's a couple things to be aware of with this. So if I do want to call a macro low on this asset, I absolutely fucking need to see a blue buy signal on this indicator. This again is a more fundamentally based indicator, and I do think that it matters a lot. And of course, yes, we have seen the China news, the China banning of miners essentially drastically affect this. That's this humongous red over here, the biggest red we've ever seen ever on this, and for the longest time as well, actually. Anyways, with that said, my point with this is that anytime that we have seen a capitulation signal on this, which we did see actually a couple times over here, there has never been a new all-time high printed on Bitcoin ever in the 11 or 12 year history of this, which does have about 11 iterations or 12 iterations right now. There has never been a new all-time high printed before first getting a blue buy signal back on this indicator. I'll repeat. Anytime that the hash ribbons has printed a capitulation signal, there has never been a new all-time high ever printed in Bitcoin ever without first seeing a blue buy signal on that indicator. So I would still be open to switching my views around on the macro if regardless of this indicator, if Bitcoin could do one thing. I need to see either, at the very least, a daily, preferably like a higher time frame than that, like a 3-day, 5-day, or weekly would be perfect. Closure back above 50,000 bucks. If that happens, I'd be very happy to call, max macro bull once again. Yes, there's going to be ebbs and flows, but it's time to just kind of, look for the longs more or less if you want to. Anyways, at least that'd be my disposition. Of course, it's not finished fast. I'm not a financial advisor, but as it stands right now, we do not have that, and we're very far away. Now we have seen the greatest contractions that we have seen on this indicator ever since we got this culmination, pretty much in 17th of July, actually. Within the last few days here. So that is good, and that will draw it closer and closer. But as you can see, even if it does cross back up, about what this is represented in a percentage format, by the way, in case you're wondering, it's same indicator if you're just looking at it on TradingView. But basically, just because it does cross back up with the moving averages right there does not mean you're going to automatically get a blue buy signal. As you can see right here, the signal came a little bit later. These ones over here actually worked pretty damn well for getting it right on the money. This one over here a little bit later, this one over here on the money, this one over here certainly a little bit later. You get the idea. So while it is drawing closer, it's not saying that we're going to get a signal like as soon as that does it, but it's going to, you know, open up the possibilities again. And you even actually saw that on the first drop down right here. This was in late May, actually. We did get blue on it, but no blue buy signal. So that is why it's very, very important to actually wait for the signal itself. Anyways, if we got that, I'd pretty much be looking for the next higher low, because guess what? 10 out of the 11 signatures that we have seen on this indicator have once the blue buy signal has been printed, the prior daily low was the macro low before never getting tested again. The only time where that did not work is actually back on over here in coronavirus dumb times. We got the blue buy signal, and obviously this one actually does act as a low firsthand, but we do come lower than that, you know, a little bit later. All the other ones do, however, and this needs to be seen on a daily. I'm on a weekly right now just so I can showcase the whole damn thing, but you can also visualize it from here as well. Boom, 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 boom. Okay, great. Anyways, I don't want to go through everything like right there because this video is already 30 minutes long and we still got a lot more to go, actually. Oh, dear Lord, man. What did you fucking strap into on this dildo ride? Anyways, okay. All right, so that would be one of the things that I need to see. The other thing I need to see is I need to see a daily uptrend at the very least. Right now, we actually don't have a daily uptrend. We do have a higher high, so that is good. But now we need to see a higher low. So at some point, Bitcoin will pull back, probably in the next week or two, scare the shit out of everyone, and hopefully set in a higher low if you want to be bullish. If it's really fucking good, we'll see the blue buy signal on top of that as well, and that'll look extremely excellent. And for right now, we do see on our BBWP, our volatility-based indicator, we actually did get into the 93% percentile yesterday. So I actually would be looking for this to go into a bit of a contraction phase over this next week, maybe even 2 weeks. And that's at the point where we might actually see something like that. If that happens, that'll be the stars aligning. I'll be very bullish, I guess, long term. And you can call me fucking Crowns runs with bulls, but very similar signatures to what we've seen in the past right here as well. I'm talking about 2020 and 2018, both of these being humongous dumps, 50% or more. And what do we see? We see it hit a 100 percentile on the first major move down. We saw the same thing over here in May. Then it takes about 2 months for it to get all the way down at the single digit percentiles right here and right here and right here. Well, and then we see a nice explosive move to the upside in this case, well, in all these cases really. And then they all actually top out. Firstly, this one about 95 percentile, this one over here at about 92 percentile, and thus far this one over here at about 92.5 percentile. So a nice loving expression right there as well. And then after that does trend back down, and then we get to find out, okay, is this like a really solidified low or not? And I want to see it confirm with the other signatures that we did see earlier. Okay, cool. So now we get to go over the bear stuff. All right. Well, first off, I don't necessarily know if I want to go over the bear stuff because realistically, here's the real bear stuff. Hey, if you take out the June lows, which is 28,750, I'm gonna be pretty fucking bearish, looking for $20,000 and maybe even $15,000 over time. Although I do suspect it's very unlikely, at least specifically from the hash ribbons indicator, it's very unlikely to see below the last blue buy signal that we had right over here, because again, 10 out of 11 of those signals have never traded lower than that. So that is, better than 90%, of course. Anyways, okay, so let's talk about why I think at the very best, we're going to get a bull trap. Or sorry, it's not the very best, but we're very likely to get a bull trap, probably, in the mid, maybe deep $40,000 territory. Okay, first and foremost, what do we have over here? Just from a general standpoint, just structurally speaking, well, here's CME chart, of course. What do we see? We do see a nice massive gap at around 45 to 48,000 bucks. That also directly is in line with the 618 Fibonacci retracement over here, and this is a bearish retracement, so that would be, that would be a traditional bull trap area, if you will. Anyways, what else do we want to get onto right here? Well, now let's bring this one step further. Let's go on to the biweekly MACD. The biweekly MACD has had 3 very specific signatures in the past, and we're getting our 4th one right now. And they have been when the biweekly MACD crosses the downside, Bitcoin essentially does something very similar that it has done in the past. First one over here that we saw in 2019, Bitcoin gets a biweekly MACD cross on the downside right here. Bitcoin comes down based off the white 20 simple, bounces off it above the 9, rejection, as you can see right here. Sorry, the white 20 simple and the cyan 9, and then rejects. So that's your bull trap, by the way. This bull trap giving you about a 50% move to the upside. Remember that number as well. Comes down to the 55, bounce again, rejection, and closes lower over time. Same thing to this one over here. We get a biweekly MACD cross the downside. Bitcoin comes down based off the 20 simple, bounce up above the 9, rejection, down to the 55, and down we go. How big was this bounce, by the way? That's interesting. 60%, 64%. Very interesting. Then we have another iteration right on over here. Bitcoin gets the biweekly MACD cross on the downside right here, based off the white 20 simple, bounces above, and rejection down to 55 and closed lower over time. All right, how much was this one? That's very interesting as well, 60%. Anyways, Bitcoin thus far has gotten the biweekly MACD cross the downside in very late May right here. Let's just see, playing with numbers, what would a 50 to 60% move look like? 50% puts you at $45,000. 60 puts you at 46.5. Very interesting. Okay, let me just bring up my notes once again. Here we go. All right, how about this one? Okay, let's go over to the 5-day, and what are the ones that I'm looking at? I have it written out here. Okay, 10, 21, 89 on a 5-day. Here we go. Okay, let's get rid of all this. We don't need it right now. We need a 10, we need a 21, we don't need the 200, we don't need the 55, we need this, and we don't need that or that. Okay. Hey, I missed one. Did I? Oh, my bad. There we go. Whoopsies. All right. Let's get, oh, wait, nope, we do need this one. Jesus Christ, man. I'm all over the place right now. Not helpful. Need that one, and we don't need that one. Okay, beautiful. We just put these back on over here too. So everything is all good to go later, so I don't get too confused, because I will. Anyways, okay, so here we go. We are looking at the red 10 simple, the yellow 21, and the cyan 89 on the 5-day specifically. We have seen a very similar setup to this several times in the past, actually, where Bitcoin will come down to the 89 exponential average, or sorry, first get the bearish cross between the red 10 simple and the yellow 21, then come down to the 89. First bounce, as you can see right here, is a rejection, and you already know the percentage on this one because, well, it was basically the same iterations as last time, and then bases lower and comes down lower over time. So same thing right there. Same thing over here. It comes down to the cyan 89, bounce, or sorry, we get the bearish cross right here, comes down to the cyan 89 right here, bounces up above the above the 21, boom, rejection, lower over time. We have another iteration over here. We do. Bitcoin comes down, or sorry, we get the bearish cross right there, comes down to the 89, bounce up, bull trap, and down we go. Any other iterations? This one over here, kind of, not really. A little bit too young for those to even populate and make much sense. But as of right now, what do we have? We do have the cross right here. We've based off the 89 thus far. We're bouncing up above, and well, as we have seen, all of those iterations in the past have not worked out too damn well. Anyways, what else do we have? Okay, let's put on the Gaussian channel once again. Here's a 5-day Gaussian channel. Or we could even go back to the weekly and reassess what we said earlier. Anytime that Bitcoin's even tested the top side of the Gaussian channel on the weekly after being away from it for a very long time, those have been, well, bull trap, or sorry, bounce and bull trap, bounce and bull trap, bounce and bull trap, bounce, small bull trap, and down. And what have we done this far? We're bouncing. It's bouncing. It's looking good, but not too good. 5-day, what are we looking at right here? Well, anytime that we have closed actually below the median band and then regained it and tested the top side of it, well, we have one right here. We have one right here. These are slightly different iterations, by the way, in case you're wondering. We ever so slightly have one over here, and we have one. Actually, this would not count. Actually, no, it does count as one right here. Bounce up, boom, rejection, and down. Anyways, coming back over to our current price action, guess where the topside Gaussian channel comes in around? About $45,000. That's interesting. What about the 3-day? We just regained the bottom side of it, by the way, as well. And where is the median band of it, which typically we'll test after that happens? $45,000 and some odd change. What about the bi-daily? Oh, we regained the bottom side of it as well. Where's the median come in around? 44, actually a little bit lower. Daily, we are healthily above as of right now, but it is still red, which is, you know, it's not a death sentence. I mean, it can't regain itself. However, it should be known that anytime Bitcoin has turned red on the 3-day, you know, those have been, well, those have been essentially, bull market over. All of them except for this one. This one did move slightly lower, but pretty much the low was in over here. This one over here, obviously done. This one over here, obviously done. This one over here, obviously done as well, even though those bounces did get, rather high and aggressive. So I do think that deserves a bit of, understanding as well. Okay, another one that actually we have not spoken about at all, in fact, on this channel, or actually very, very briefly on this channel. That'd be the PMAR. The PMAR. Okay, how am I going to explain this one? Let's put on the weekly right here. Okay, so we don't need that. All right, so what are we going to be looking at? Actually, we're going to be looking at this plus the Pi cycle indicator. And in fact, the Pi cycle indicator, obviously, I think most people are familiar with this one by now, but anytime we've gotten the Pi cycle top indicator, been bull market over for a while. I mean, we see 60% correction right here. We see ultimately an 80% correction right there. These are crashes, not corrections. An 85, 86% correction crash right there as well. And we have gotten a Pi cycle top right here as well. Thus far, it's been, rather comparable, that 50%, but could it be a little bit more? Certainly, yes. What's another 60%, or sorry, what's another 10% tacked on top of that? That brings us down to about $25,000 actually. Anyways, what I want to talk about right here can be looked at as both bullish and bearish. However, the interpretation that I have of it as of its current stature would be bearish. And that's going to be the PMAR. So what is it? Essentially measuring the ratio. It's essentially measuring the percentage away from current price action that a moving average is. And what I'm running right now is I'm running it over here. I'm running this with a 20 length and just a simple moving average, by the way. You can use this you can use this indicator in many different ways, but this is what we're going to be using it for right now. Anyways, as you can see, there have been several times where it has come down actually to kind of where we're at right now, just below 0.7 actually. And every fucking time has been a phenomenal bounce. Some of them have even been macro reversals, never to be tested ever again. Now, this first one over here is rather interesting. We have a very similar setup to what we saw over here in 2018 on this high. We have a very similar setup to what we saw on the 2014 highs right here as well, where we do see the moving average on this come down very aggressively as the PMAR comes even all the way down in this point to 0.6. This one over here, same area, and this one over here, a little bit shallower actually. And all of those were your bull traps of this and this right here. Rather interesting. And even this right here as well, actually. Well, actually, no, sorry. Apologies on that one. That is not true. Okay, so we have two iterations, not a whole hell of a lot, but those two iterations were obviously bull traps. Now, you can also see it has been signaling, and by the way, the green's just kind of identifying that it is, within that realm as well, that we are around that region. Anyways, this area right here was a macro low. This was a macro low. This was your macro low. This one over here, bull trap, and this was a macro low yet again. So you can kind of look at it both ways. However, in its current posturing, there are a lot more things similar to what we have seen on the other bull traps. However, this, like I said, this one can be taken in both ways. Okay, what else do we have we want to be looking at? I think that's actually pretty much it for like the good stuff. Okay, there is maybe one more thing that we can very briefly go over right here. That would be, of course, this chart right here. Now this again can kind of be looked at both bullish and bearish, but what I do like about this is one, the super guppy actually still leads us upwards and onwards, which is more or less good. It's a 3-day still working here. Yeah, 3 days still working, I guess. Hasn't turned right at least. Anyways, going back onto the monthly, if we do look at monthly Stokes, we've actually never seen monthly Stokes turn in this region right here ever, which is interesting to me. Just kind of as an aside, it doesn't mean anything. Obviously we can, but in order to actually cross and back onto the upside, we need to close above 58,500. So basically what I'm saying right now is that if Bitcoin is going to turn out to be bullish, I do suspect that we will very likely see, I do suspect that we'll very, 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 very likely see a pullback from the mid, maybe even deep $40,000 territory, whether it's $45,000 or $50,000. I don't care. It's all the same to me. However, what I'd really want to see on a macro low is I'd want to see that pullback be bought. Let me just put these back on over here. Speaking of, there we go. Boom. Get you off, get you on, get you on. Okay, cool. By the way, guess where the 200 is right now? That's interesting. Right around about $45,000. In fact, nice little area as well. In fact, that actually is where you got rejected on your 2018 bull trap, I remember, and I believe your 2014 as well. Yes, it is. It is. Anyways, whether you're bullish or bearish, I do think that Bitcoin's going to pull back somewhere within that region right there. And then we get to hold our breaths and see if Bitcoin does come back down and try for a higher low, perhaps somewhere around the CME gap that we saw actually at the beginning of last week, somewhere down around 33 to 34,000 bucks. That's in a higher low somewhere around there, scares the ever-loving shit out of everyone. And then maybe, just maybe, that will give it enough time to give a blue buy signal on the hash rate indicator as well. And it would look something similar to perhaps this, like, boom, reject, no, bad, oh my god, it's terrible, and then try for a higher low right there, get the other signatures that we're looking for on expanding volatility, and then we'd want to see something like that, Something like that is what you'd be looking for. And that'd be like your massive W. That would be phenomenally good. That would be your macro low. I'd feel extremely confident with that. And we could talk about, $100,000 targets and more. By the same token, if this is going to be bearish, which it could very well be. I mean, there's actually more bearish things than bullish things right now, all things considered. Whoops, wrong one. What we'd probably be looking at is something like this. Bounce up here, probably rejects, comes back down around that gap fill. Gonna give it another bounce, but reject. Lower highs. No, not another lower high. Not another low. Fuck! And then all the way down. Something like that is probably what I'd be looking for. Personally speaking, I actually don't care which way it goes. It's nicer if it goes up. I mean, it's easier to trade. Like this was pretty nice over here. Didn't really have to do all that much, but either which way it goes, have to be open to those possibilities. And realistically, if you just want to make it nice and simple, just use June lows as a continuation point to the downside. To the upside, a little bit more diabolical because I want to see a few more of the things get ticked off as well. But for right now, I mean, things look good. I think that we're very likely to test into the deep $40,000 territory. And I'd be extremely happy to see Bitcoin close above $50,000, and then we can start to play the upside game once again, which is rather fun. But other than that, I do suspect that this is probably a good place for me to kind of step back and let you make your own decisions for yourself. Know where your risk is, as always, if you are going to be trading these more long-term things. Of course, this is not financial advice. I'm not a financial advisor. Just sharing my ideas here for better or worse. Hopefully, it is in some way helpful. This video is already way too long, so you know what? I'm going to shut it off right there. Take care. Have a nice Sunday, and hopefully see you next time.